Hi guys, this is Kenji from the Tradveller,
And I'm Ryan from the Tradveller.
and today we have a very special sessions that we're going to carry out through a sort of like chatting session. So I hope you guys can get a lot of different insight over these sessions. And today we are going to discuss about quantitative trading myth and questions. Like there are maybe certain kind of questions you guys maybe wonder whether you are suitable for quant or not, or maybe quant is like something like a very incredible, you don't need to do anything kind of thing and you can start earning. And in today's sessions we're going to discuss and talk through all these kind of myth in quant trading. So let's go. Okay, first thing first, is quant trading really no need to do anything when we are automated? So I think for this maybe Ryan you can share a bit more because you are running a lot of Algo, like more than 100 strategy under your portfolio. So maybe you can talk about this, like do you really no need to do anything, like just sleep and let the machine earn for you or not?
In some words, yes and no. So whenever your thing is like in a running stage, then yeah, you can sleep and you earn. But in the early stage, I feel that there's many things you need to do as well. Like you need to think of what is your strategy is, how you're going to construct your strategies. Is your strategy really works? You need to test it in live or maybe live testnet. And yeah, I think there is still many things you need to validate whether the strategy that you construct is true or not. Is it really that you earned, or is a fake strategies that might cost you a lot of money? Yeah.
So maybe about this, maybe you can just simply describe or explain your daily routine as a quant trader. Like how do you monitor your strategy and what's the process you take, like day in day out in doing your quant trading?
So roughly every day I will just like cross-check whether my alpha or my alpha pool, does they really capture a trend, or did they do a buy or sell? Like why they entered in this particular point of price? That basically need to understand why it entered a position at this particular moment, I feel. So it's not regular things to do, but whenever there is some specific event like a black swan event, or there is a huge momentum up or down, then I think that's a moment where you need to go in depth and see, did your alpha really catch this bull run, or did your alpha really catch this bear move? So that you can understand more about how your alpha will behave in this kind of particular situation, and what are the things that you can do to improve your overall alpha strategies. Yeah, so I think after reviewing, then the things is actually quite boring. It's like every day you just keep on finding a new strategies and combine it, whether is it good to play together for the overall alpha. Yeah, so the routine is almost the same. It's very boring. So you need to find more things can entertain your life more. But basically it's quite happy when you find some alpha strategies that is good to your overall portfolio, and then you make it more stable, the increase your overall Sharpe ratio, increase your overall karma ratio. Yeah, I think that is the fun part, where you found strategies that is working and it is good to combine it together in your alpha pool. But the hard thing is, it's not easy to find. Yeah.
Okay, as you mentioned, I just remember, because I personally myself, I also have a not so huge portfolio compared to yours. You got over 100 strategy over there. My portfolio has about maybe 10-ish kind of things, and you do remind me a bit of, like, I do remember when I was developing, I do spend quite a lot of time, like coming out the alphas, like checking through whether they really works or not. And even though I found some of them pretty good already, and when I deploy them to run live, I myself still need to from time to time monitor them and checking any problems. Like my problem might be not as big as yours, but I do find that it's not 100% fully do nothing and let the machine run. I still have to monitor from time to time, but definitely compared to manual tradings, where I have to look at the chart like almost during the active hour, or maybe if I do a midterm trade, I maybe have to look at the chart quite a long time in the days. I would say that for quant trading, it's not a fully sleep and earn kind of thing. We do put in the effort, but in a different way. In manual trading, I put in the effort in monitor the price, monitor the markets, and then take my trade actions. Whereas in quant trading, I put more of my time into building the machine, managing the machine, and those kind of things. So quant trading, in conclusion, is not fully sleep and earn. Although we do sleep and earn, when market is running in the midnight, and when there's a very good chances happen, and the algo and the alpha catch them, they do trade, and we are sleeping and earning. But we still need to do other things like building the things, optimize the things, and monitor the things.
Our focus point is different in short. One is looking at the chart, the other thing is looking at coding things.
Yes.
And more research like articles and so on.
So from this, I can say that quant trading, especially after fully automated ready, still need to do something.
Yes.
It's not do nothing. Yes. Okay? So the next one, quant trading. Some people might think that, is quant trading always win? Because the spending so much effort looking for the alpha, all the optimization, all the backtest, it seems like in a very intuitive way that we might think, after all this effort, like all the computer power put in already, the strategy or the alpha will not generate any loss. And this is a myth that some of you might have. So for this, I personally can say that no.
Yes. It's wrong.
Yeah, it's wrong. Ryan has a lot of strategy, and we both can say it's wrong.
It's wrong.
It's wrong. Quant trading going to generate you a net positive return over a series of long trades, but it still gives you losses here and there a bit.
Actually, in short, quant trading, yes, you still lost, but you know how much you can lose. This is the keyword. That's the power of quant trading. You know how much you can earn, you know what is your stability of your portfolio, and you know what is your maximum drawdown. So that when you have this kind of information there, when you're running your alpha, like from live time to time, you won't get panic. You know that, okay, that is a maximum threshold you would need to start monitor whenever some things happen. So what if, let's assume that your alpha strategies, your maximum drawdown is around 10%. So if the overall alpha pool, when it's still running and floating around 1 to 2%, you just chill and you can drink a coffee or so on and continue do your things, research your alpha and so on. It's much better than you keep looking at your portfolio P&L in short. So the things that when you need to be aware of is when it's really near your maximum drawdown and so on, then you need to find out what is the potential things that cause your overall portfolio to reach a new maximum drawdown. Yeah, that is a moment that you need to get panic. Okay, but not really panic. I need to understand why this thing happens. Is the market structure changed, or is one of your alpha is already decay? Yeah, so you need to do this kind of checking. So actually, in short, you still lost money, bro. Don't play. Trading is all about probability, man. So quant trading, the beauty of quant trading is you know that you acknowledge that your overall strategies, what is the maximum drawdown you would get. This is the information that you will have.
Yeah, speaking of this, I guess I got something I want to add on, which is not exactly to do, I would say it's to do with quant, but not exactly to do with automated trading. It's actually to do with manual trading. So when I was developing my quant strategy, which meant for automated trading, so after I have come up my alpha already, which gives me a very good equity curve, but when I go into the details and check into my trade details, there are losses there. And from this very nice equity curve it generated by this alpha, I sort of have a improvement down mindset, because when I was doing manual tradings, sometimes there's going to have maybe a series of loss, like maybe 5 or 10 times. Although it's not big, but it's really attacking on the mental and confidence. So after doing quant, is that when I see even though my quant strategy is giving me losses, sometimes there are a series of losses over there, but in the long run, it gives me a positive return. From here, my mindset start to improve. Even when I'm back to my manual trading sometimes, I start to realize that this loss actually mean not so big compared to before already, because I have seen that my very nice equity curve this type of equity curve do generate losses from time to time. And it's very normal because the strategy is going to have losses in between. So this is something that a quant trading strategy has given me more than just the result, is that quant trading, or I would say quant trading analysis, have proven that in order to be success in the market, your strategy don't need to be always winning. You can suffer some losses within the range, but in the long run, it can give you a positive result. And those things prove to me in a very clear way, the very numerical way, which actually improve my mindset and emotion and confident in the long run.
Yes.
So this is it. Quant trading always win? Sorry, no. But in the long run, it is. Yes. Next myth or question we will say is that do you or do we has to be very smart, very intelligent to be a quant trader? So maybe let Ryan explain to you whether you really have to be like that or not.
I think a lot of your mindset will think like you need to be in a big firm, like a big trading firm, to be able to do quant. Sorry, no, it's false. You can do it in a simple laptop or even in your house, anywhere else, but not phone lah. Very obvious, you need to do some coding thing. So the answer is no, in short. You can do it very simple. You can start using by Excel. And yeah, Excel is a very simple tool that everybody have. So it's not as complicated as you seem. You need to do a lot of whole bunch of 100,000 of coding and so on. No, just make it simple. You can just start. The most important thing is you need to have a hypothesis. That's the important part. When you want to construct your strategies before automated it, you need to first have a hypothesis. So once you have a hypothesis over there, like maybe let's say MA50 example, over MA50 you want to long. That is a hypothesis. This is the most important part in the journey of being a quant trader. So when you have this hypothesis, that is a moment where you need to start to quantify whether or not this hypothesis is really works or not. So you have to plug in like all of those performance metrics, Sharpe ratio, Karma ratio, and so on, to really prove to you that this hypothesis is working. So yeah, that's all. Simple as that. You can do this everything by using just, So my answer is no. It's very simple to start. You don't need to be a big firm to able to do quantitative trading.
Maybe for this one, I go add on my point. So before this, actually, I'm someone thinking that a quant trading should be done by someone really, maybe
genius.
Maybe not say genius, but those with a very strong supporting environment. When I say strong supporting environment, what I mean is like those very big firms, you got very good seniors, you got a very complicated or maybe a very comprehensive kind of computer system, everything in order for you to do quants. Like you're going to do those very high frequency kind of trading, very, very technical. You need to be very, very skillful in terms of your trading knowledge, in terms of your computer knowledge. So that was my own perception before, but up until I get in touch in quant over here in Tradveller, that really opened up my mind. Is actually you can really start your quant with just Microsoft Excel. Microsoft Excel itself is something very, very powerful, very, very useful in terms of coming to quantitative analysis kind of things. I myself is someone have changed the perception. So Ryan, you have been through so many things. You also said that you don't need to be a genius to start. I personally, I also feel that. I personally am hands-on doing the thing. I also feel that not really. You don't really need to be a genius, a very smart person, or you don't need to have a big firm supporting you to start your quant trading journey. And speaking of this, there's something maybe you guys might wonder, like, do you really need to learn to code in order for you to start quant trading? So my answer is no, and no. Actually no. To us, what we think that the most important part, like Ryan said just now, is about coming out the hypothesis about how the market moves. The hypothesis, also including your observation about the market. So these two things is actually the most important thing. Once you have this hypothesis with your observations, you can actually hire someone to help you to come out the quant trading analysis report that you want. So in doing the quantitative trading report, you do need some logical skill set, or maybe some programming or coding skill set, but those things are not some very, very hardcore or some very, very high-tech kind of, coding language kind of thing. Actually, it's still pretty simple in a way, just you need to be really familiar with the code. But if you don't, you can just hire anyone who is in the coding side, the software programmer, like maybe they code for a year or two for anything. In fact, they can easily, come out the thing you want for you. So you don't need to really need to learn how to code. You don't have to do that actually if you don't want. Yeah.
So actually the whole path of being a algo trader, first you have a hypothesis. Next thing is you need to know how to validate your hypothesis, which is quant trading. Then after you validate and you know that it is working, actually you can go for semi-automate or you can go for fully automate. So once you know that in which particular moment you need to go for a long or go for a short, you can just put this logic in PineScript itself, and then you can just plug some signal to show you that, oh, this is the moment where you need to go for long. And then you just manually open up your trading apps and press long. Yeah, that is semi-automate. So in other terms, the moment where you need to go into semi-automate or fully automate, that is a part where you need to go for coding. But actually in quant trading, you don't need to go for coding itself. Like I say just now, you can go for Excel. It's not much code. I think, in fact, no coding involved in Microsoft Excel. Yeah, so you can just very simple to construct like the if statement. If you don't know, then you can go for YouTube. Maybe upcoming video will also show you that how you can backtest a strategy using Excel itself. Yeah, so it's actually quite simple. It's not hard. Yeah, just a simple logic there. Then yeah, you're good to go. Microsoft Excel, perfect.
Yes. Okay, so the next one and the last one for our today's sessions about the myth and question of quant trading is that, can quant trading predict the markets? So these ideas are, after all this computer power we put in, so some of you might think it's about machine learning, AI kind of things. Well, it's not exactly that thing. Quantitative trading is not that thing yet. Okay, so but you might have idea that since we are involving so many things with computer power, we backtest with so many kind of ways, and all the computer, the things, the ideas and things. So can quant really predict the markets or not? And for this, we will say that it's like
yes and no.
Yes and no. It's a yes and no.
Yeah.
So why yes? You start first. Why yes? Maybe I go for the no and you go for the yes. Why yes?
Why yes? Okay. So basically, quant trading, like it gives you an overview of what is the previous market looks like if you are running your strategy maybe for the past 2 years or 3 years. So you have know that in this particular moment, in this specific market condition, you would earn money. So in the future, if this kind of market structure or this kind of environment happens again, there is a high chance that, you can predict the market to buy, go long or go sell. But it's actually not predicting, everything is about probability. Trading is all about probability. You will do things that is high probability, high expected value, then only you will do it. Like in manual trade as itself, it's the same. You go for maybe 2 to 1 profit to loss ratio, then only you run that particular strategy that you are running in your manual trade. So it's the same thing in quantitative trading as well, or even algo trading itself. So in the long run, you know that in this particular moment, you'll earn. Yes, there is a chances that this particular market structure won't happen again in the future. So everything is about probability. But through quant trading, it gives you an overview that yes, there is a high chance that this market structure will happen in the future again. So that's the part where I say yes, it might predict the market. It gives a higher chance of winning the market, making a better decision, making a more informed decision, a more data-driven decision. Yeah, so this is the moment why I say yes.
Yes, I actually fully agree on his reason in the yes part. And for me to go for the no part is that why quant trading cannot predict the market is because you see, when we are doing quant trading, or we say we do the quant trading analysis, we are using historical data to do all the testing, optimization, to find the patterns that is giving us an edge, or we call it alpha, to trade in the market. So here's the thing, we are almost almost fully rely on the historical data. And one thing is, the way something happened before could change in the future. Meaning, what happened before might not be happening anymore in the future.
Yes.
Especially when it comes to a very big market sentiment shift or market structure shift. A very good example I can give is that most of us know that during or maybe before 1970s, our currency is tithing the value to gold. So after that, America, they start to untie this linkage of value between the currency and gold. So this action in itself has made a big difference to the market structure already. The value of money start to become something very, I would say, inflatable. I put it this way, very inflatable. Nothing is pulling it already. So under this kind of market conditions, whatever results, or maybe let's say we are doing quant trading back in 1970s, any results that we generated with the historical data between, let's say, 1900 until 1960-ish, those kind of data mostly is not reliable for any action that we can take after 1970s if it is fundamentally linked to the value of currency, because market shift already. So this kind of thing actually happen quite often in the market, like 2008, the subprime mortgage crisis in America. Supposedly there is a debt ceiling for America government to have, but they shifted the debt ceiling, and after that they keep shifted the ceiling again. So imagine just between the year from 2008 until recently and compare them to before 2008. These two eras is big two eras. They are different by many ways already. So this kind of thing, when we are using quantitative trading analysis, it can't really tell us what will happen in the future. Imagine this is 2009 when America is start to shift their debt ceiling. So even us quant traders, we have all this computer data, everything is on our hand, but we can't really tell what will happen in the next years or maybe next few years, because market shift by such a big magnitude. So when this kind of thing happen, we can't really predict what will happen. But when this kind of thing didn't happen, so let's say everything still move in the path. Yes. We can use quant trading to predict the market, but no also, because all these kind of market structure shift kind of things happen from time to time. So the answer is yes and no.
Yes and no.
Yeah. Okay, so I think we come to the end for today's sessions. Do you have anything to say? No more? So
no more.
This is our session for today. If you like the session to carry out in this kind of format, we're having some sort of chatting kind of things, give us a like and give us a comment. Maybe in the future we will have more kind of video in this kind of form. So again, I'm Kenji from Tradveller.
I'm Ryan from the Tradveller.
And it's good to have you guys with us today, and hope to see you guys in our next video.
Bye.
Yeah, bye.